Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and the banking awareness part of it. And basically we are covering the types of banks. Alright. And we had covered till the 5 types so far. The first type we had covered was the commercial banks. Alright. Second type which we had covered were the cooperative banks. Okay. Third type which we had covered were the regional rural banks. Okay. The fourth type we had covered were the payment banks. And the latest type which we had covered was the small finance banks. Okay. So these are the types we had covered so far. And basically, now we had started the discussion over the important banks, which is known as the foreign banks. Okay. In the previous lecture, we had started with the introduction. Okay. We had taken the example of their application forms, their evolution. All right. Whatever is the capital requirement. All right. Also, we had discussed in detail the Basel III framework of the capital adequacy, like what are the provisions enumerated in it. Okay. What is the rate and what is the provision, like 7% of the capital reserve. All right. So I hope that you revise them properly, because if you are not doing these things, then you won't be able to grasp the facts and figures properly. Okay. So that is the topic we are covering, the foreign banks. Okay. So now let's start with the prudential norms. Okay. Prudential norms are also known as careful norms. Okay. So the foreign banks are subject to the prudential norms similar to those applied to the domestic banks in India. These norms include maintaining a minimum level of capital adequacy, like the USD 25 million, right? Okay. Thereafter, classifying assets based on their quality. It means two types of assets: good quality. Second one was the bad quality. Okay. Thereafter, ensuring sufficient liquidity to meet the customer demands. Okay. It means that there is a minimum liquidity requirements, like has to maintain the at least 7% of their capital reserves with them to be invested in a good assets which could be converted into liquidity easily, and to maintain it in the cash form or the liquidity form. Okay. This is what we had discussed already, and now we are just trying to revise it. RBI conducts regular inspections and audits of foreign banks' operations to assess their financial health, risk management practices. Okay. Now, branch expansion. Okay. Like the domestic banks, the foreign banks also try to expand their branches. Okay. So that they could invite or attract the customers of new places. Okay. Suppose if the Citibank has the branches in Delhi, now they will try to open the branches in Jaipur, in Bareilly, in Meerut, you can say, and other areas also. Why? Because they will try to grasp the customer of that places also for the expansion of their business. Okay. So what are the provisions under this BRA Act regarding the branch expansion for the foreign banks? Okay. So let's understand or discuss that. The branch expansion for the foreign banks operating in India is regulated process overseen by the Reserve Bank of India, because the Reserve Bank of India is the regulatory authority. Okay. RBI plays a crucial role in evaluating and appearing branch expansion requests to ensure that they align with the bank's financial capacity and the broader economic and financial environment. All right. It means that the role of the bank, foreign bank, in Indian economy, you can say, or the contribution they had made so far after getting the entry, is the primary base that the RBI will allow them to make the expansion. because the foreign banks are generally the competitor of the domestic banks. Okay, it means that if the foreign banks are being allowed to expand themselves more and more, this will be a direct competition to the domestic banks. Okay, that's why the RBI first evaluates that the presence of foreign bank and the expansion of the foreign bank is beneficial for India or not. Okay, if it is not beneficial, but still it poses a competition with the domestic bank, then might be there are chances that the foreign bank will not get a easy approval by the Reserve Bank of India. Okay, now let's move forward. So the first step is the request for the branch expansion. Okay, when a foreign bank operating in India wishes to open additional branches, must submit a formal request to the Reserve Bank of India. This request outlines the bank's expansion plans, including the proposed locations and the rationale behind the expansion. Okay, like suppose this is the foreign bank called XYZ. This bank now operating in Delhi. Okay, but they proposed or they are planning to establish their offices in Mumbai, in Bareilly, okay, in Hyderabad, and other places. If they are willing to open their office there, then first of all, they have to submit the request to the Reserve Bank of India. In this request, they have to mention that what is their plan to expand. Okay, like what is the motive behind of expansion? To grasp the customer, okay, to grasp the investors, all right, whatever is your motive. Second is that your rationality, like on what basis you are requesting to get expanded. Okay, like you can say we had contributed this and that in the Indian economy, our customer base is this and that. Okay, we are giving this interest to the customers, we are taking this instructs for the stakeholders. All these kind of rationalities should be mentioned in the application so that the Reserve Bank of India could go through it. Okay, and the third step is share your preferred location. It means that in the request, after all these things, Mumbai, Bareilly, and Hyderabad will be mentioned. Okay, means the XYZ will request the Reserve Bank of India to allow the XYZ to open their branches in these cities as well. Okay, so it is the first case of submission of the request. Second is the evaluation. RBI evaluates each branch expansion request on a case by case basis. Evaluation considers several factors, including the first is the financial capability or capacity, you can say. Okay, the Reserve Bank of India assesses whether the foreign bank has the financial strength and the stability to support the new branches without compromising its financial health. Okay, for example, suppose this is the bank or XYZ. Okay, right now they had the demand of rupees 500 crores to meet their customers, but now they are planning to establish the office in the other cities, like in Badaयूं, you can say, okay, like in you can say Mangalore, all right, like in Mavur, Kerala. They are trying to establish their branches these places also. Okay, so doing this thing, they are accruing the expenses of rupees 100 crores at each branches. Okay, so by going through this definition, what we have observed, they had 500 crores, 300 crores had been distributed to the new branches. The remaining will be rupees 200 crores only. Their demand was 500 crores. They have 200 crores. It means that their financial stability will be harmed. Got it? In such a case, the Reserve Bank of India might be not allowed the particular bank to expand itself. Okay, because it is impacting the financial strength and the stability of the bank to support the new branch as well as to the existing branch. Okay. Second one is the economic viability. RBI reviews the economic viabilities of the proposed branch locations to ensure that the bank services are needed and can contribute to the local economy. Okay, like suppose this is the bank called XYZ. They had requested to let them open their business in the city of Bhubaneswar. In the city of Bhubaneswar. Or we can say instead of Bhubaneswar, any other city we can take. Okay, suppose this is the city of Bhatinda. Just an example. Because Bhubaneswar is a tier 1 city and Bhatinda is a tier 2 and tier 3 city. That's why I have taken Bhatinda. Okay, so when the XYZ requested the Reserve Bank of India to let them open their branch in the Bhatinda, when the RBI will ask them why, so they said because there is a customer, we will introduce the fixed deposit services. There is a customers who may acquire our fixed deposit services which we are planning to introduce. But later the RBI finds out that in Bhatinda, the fixed deposit service is having low frequency or almost no frequency at all. Either low frequency or no frequency at all. Okay. In such a scenario, the Reserve Bank of India will say that your presence in the Bhatinda will not contribute to the local economy. Why? Because the service you are planning to introduce is not in the habit of the people. All right. And it is not using of the people. So in such cases, the RBI might be cancel the request for approval for the expansion, or second thing might be ask the bank to change the rationality and the reason and then try it again. Okay, like RBI said that your fixed deposit is not suitable, so we are not giving you this kind of service. Okay, so the bank is asked to change the service. The bank said okay, we will provide the agricultural loan then. Okay, and in this part, the RBI again examines the situation and finds out that the local economy needs the banking system to provide the agricultural loans. It means the bank's motive behind the expansion and the need of that particular economy matches each other. In this case, the Reserve Bank of India will allow the XYZ to open their branches there. Okay, this is the economic viability. Second one is the compliance. RBI verifies the foreign bank is compliance with all applicable regulatory and the prudential norms. If the bank having the past record of violations, okay, it means that the Reserve Bank of India will not give the approval easily so that the bank could expand itself and could include more and more customers, and then might be in the nearby future the bank will become insolvent or bankrupt. All right. Thereafter, the financial inclusion. Financial inclusion is basically the part of PSL, right? Priority sector lending. The Reserve Bank of India encourages the foreign banks to expand their branches in areas where there is a need for banking services, especially in the undeserved and rural areas as part of its financial inclusion initiative. Okay, like if this is the bank called XYZ, they propose the cities which are of the high class, like the Delhi, Mumbai, Chennai, Bangalore, Hyderabad, okay, Gujarat, sorry, not Gujarat, Ahmedabad. These are the cities they are proposing to open their branches. Okay, These cities are the tier 1 cities. They're already having a educate sense. Their people already getting a better financial services. In such a case, the Reserve Bank of India may ask the bank to establish the bank at Dhanbad, okay, at Jamshedpur and other areas, which have been the tribal people, the backward people, the economical weaker sections, the marginal segments of society, which are not getting the attention from the traditional banks. Okay, in that cases, the Reserve Bank of India might be asked them to open their branches in those areas instead of going to the tier 1 cities only. All right. So remember this point also. But here is one thing also. What is that thing? Capital requirement. Like in the first thing, I had told you that the financial stability of the bank must be met up. Which means that the bank must be financially able to sustain the expansion of the branches as well as the existing branches. All right. So there might be some provision for the capital requirement for opening of the new branch, right? Yes, we have the provision. The first provision states that even for the entry, there must be USD 25 millions, right? For the entry into the Indian market. Okay. Second thing is that 25 millions is also the minimum capital requirements to be kept by the bank at all time. All right. But for branch expansion, for branch expansion, for first two branches, like the one branch will be established in any city for the entry, like they entered in Delhi, Mumbai, and whatever the place they have entered. Okay. Now, if they want to expand, so their first two branches will be extended only if the bank is able to gather USD 10 million. It means that additional 10 million US dollars are required to get approval from the Reserve Bank of India for expansion of the first two branches under the capital requirement provision. Okay. And thereafter, USD 5 million for the expansion of third or other branches. Okay. So this is the capital requirement. For entry, they required 25 million US dollars, and this should be also maintained as a capital reserve for at all times. Second, for branch expansion, for first two branches, they required 10 million US dollars. Okay. And for other branches, like for third or the more branches, they required USD 5 million US dollars every time. Okay. So this is the capital requirement scenario. Got it? Now come to the branch expansion guidelines. Whatever the guidelines issued by the Reserve Bank of India for the expansion of the branches. RBI issues guidelines and directives of the foreign banks regarding the branch expansion. These guidelines may specify the maximum number of branches a foreign bank can open in a year or in a specific location. All right. So we can say, suppose if we have the bank XYZ, which is a foreign bank. Okay. So the RBI can mandate that any foreign bank, including the XYZ, could not open more than 4 branches in a year. Okay. Thereafter, the XYZ, and that was the year of 2019 to 2020. Just take example. Okay. So the XYZ had opened their branches in 4 places. First in Delhi, second is Mumbai, third is Chennai, then Hyderabad. They had opened their branches. Got it? Got it? So, in the year of 2019-2022, if they want to add the more branch, like they want to add the branch in Hyderabad, in Chennai, in such a scenario, the XYZ will not get approval from the Reserve Bank of India because the Reserve Bank of India is limited the 4 branch in a year provision. Okay. And they had used their 4 branches in the year of 2019-22 by establishing their branches in Delhi, Mumbai, Chennai, and Hyderabad. Okay. Second case was the specific location. Okay. It means that suppose we have the bank XYZ. In Delhi, they had 5 branches in different locations. Okay. And the RBI mandated that no foreign bank is allowed to open more than 5 branches in the same region. Now they want to open 2 more branches in the same city. In such a case, the RBI will not give a permission because they had limited the branch expansion policies. Okay. So I hope that this point is clear to you. Got it? RBI may also provide guidance on the distribution of branches between the urban and the rural areas to promote balanced growth and financial inclusion. Okay, it means that if the XYZ is trying to expand the branches, suppose the XYZ said that they want to open 5 more branches in India. Okay, so in such a case, the Reserve Bank of India could ask the XYZ to distribute the branches amongst the rural and the urban areas as per the financial inclusion. Like the RBI will ask, okay, open 2 branches in the rural areas and then 3 branches you can open in the urban areas. Okay, it does not permit that all the branches must be opened in the same place. So this could be also done by the Reserve Bank of India. All right, got it? Now let's move forward. Thereafter, promoting the financial inclusion. Financial inclusion is a key focus for the RBI, and the foreign banks are encouraged to contribute to this goal by opening branches in undeserved and the remote areas. All right, as we have seen in the previous slide, that if the XYZ or any foreign banks wants to expand the branches, they might get the permission, but the condition will be that they have to obtain the branches or expand the branches in a balanced way. It means that if they are planning to obtain 6 branches, then these branches must be divided in the urban and the rural areas. Okay, like for urban, they said you could open 3 branches. For rural, they said you could open 3 branches. Okay, so this should be done, right? So that's why they promote the financial inclusion, because the people of rural areas which are generally being ignored by the traditional banks and the banks, because as I have told you many times, these are the not these not are the people who could afford the banks at who could afford the bank loans at the lucrative interest, right? That's why these peoples are generally not preferred by the banks, because the banks also have the limited amount of resources. Okay, so they will try to get the person who could afford the loans at the high interest rate. But what should happen with these peoples? That's why the financial inclusion is ensured by the Reserve Bank of India. Because just try to figure it out. If the bank which was established in the in the foreign country, thereafter the bank is now coming to the India. All right, the bank is maintaining the reserve for how many US dollars? USD 25 millions. They are maintaining the reserve for this. Okay. So what do you think? Why the bank is coming to India? Because of the motive of profit, right? So they will also try to find out the customer who could afford the loan at a high price rate. Okay. So what is the motive behind letting them come inside? What is the motive? Just only the investment that they are bringing the foreign currency for this only. And buying the or you can say not only they are bringing the foreign currency, but also they are increasing competition in the banking sector. In banking sector, right? So that's why should we allow them? The clear reason is for the financial inclusion, for financial inclusion. Okay. For example, suppose if there is a need of rupees 100 crores in the area of the undeserved and the marginalized segments, okay, and there are six banks which all are domestics, okay, these all banks are able to only grant rupees 10 crores each to the PSL or the financial inclusion people, or financial excluded people, you can say. Okay. But this will only become a 60 crores. And if we try to pressurize these banks to expand the 10 crores to 20 crores, then there might be some challenges. Like either the bank will not able to do this. Okay. Second thing is that might be their financial stability will become unstable because of our pressure. In such a scenario, suppose if four new banks, which were the foreign banks, entered in the Indian market, and thereafter they are also started contributing rupees 10 crores each. Okay, then it will become rupees 40 crores, right? Which means rupees 60 crores. Okay, let me write down again. Rupees 60 crores plus rupees 40 crores. Now total is rupees 100 crores. The demand was for this amount, right? That's how this could be helpful for the financial inclusion, because we are not have to pressurize our banks, means the domestic bank only, but we could also take the advantage of the foreign banks operating in India. All right. So this is also checking by the Reserve Bank of India. Expanding banking services in these areas help bring previously unbanked or underbanked population into the formal financial system and provides access to essential financial services. Okay. Thereafter, rural and the semi-urban expansion. To promote the financial inclusion, foreign banks are particularly encouraged to expand their branch networks in the rural and the semi-urban areas, because these are the areas where the people lives in are the undeserved, the marginalized people who could not afford the loans at the high interest. Okay. These regions often have limited access to the banking services. Presence of foreign banks branches can make a significant difference in improving the financial access, as I have given you the example, or 60 crores and the 40 crores. All right. Thereafter comes the monitoring and the compliance. Once the branch expansion is approved, The foreign banks are expected to operate these branches in compliance with the RBI regulations and guidelines. Okay? RBI actively monitors branch operations to ensure ongoing compliance and assess the impact of branch expansion on financial inclusion and overall banking services. All right. So students, basically in this lecture, we have finished the branch expansion provisions and also the prudential norm provisions. In the next lecture, we will start with another important provision of the foreign banks. Till then, just revise all the facts and figures we have discussed in this lecture and be ready for the another lecture. With this note, let's end this lecture and thank you.